What's up, everyone? It's Scotty with MoneyVest. So markets here dropping like a rock on the back of the U.S. government once again sanctioning a lot of these U.S. companies, especially in the semiconductor space, from selling their chips, artificial intelligence chips, to China. That's exactly why we've got a lot of semiconductor companies, chip stocks, selling off pretty aggressively here on the day, with SMH also down a little bit over 3% on the back of Nvidia and AMD. And of course, the entire semiconductor sector is down pretty aggressively. As always, if you enjoy this video and find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel, and link to our Discord and Patreon is going to be down below if you're interested in joining our MoneyVest community. And I really want to address this one video that I posted earlier today. This I mentioned that is going to probably be one of the most useful and insightful video that you will ever watch when it comes to trading and investing. Okay, we're going back over 30 plus years worth of data in this video, and I'm going to be back testing a specific strategy to understand the win rate for this analysis. But as I mentioned, this video will change your trading forever. I posted this earlier today that you can access through our Patreon. It's a members only private video, so you get access to everything. And this video, I highly recommend it. People loved it. And I think it's definitely worth a watch. So U.S. curbs export of more AI chips, including NVIDIA H800 to China. So earlier we know that they were putting a lot of restrictions on the A100 and H100 AI chips from NVIDIA over to China. That's one of the reasons why NVIDIA sold off last year. Towards the end of last year, it kind of sold aggressively. And now the H800 is kind of like a slower version of the similar chip that NVIDIA sells, right? This right here, again, you'll notice the U.S. Department of Commerce announced Tuesday that it plans to prevent the sale of more advanced artificial intelligence chips to China in the coming weeks. And the U.S. government says the new rules are intended to close loopholes that popped up after last year's restrictions on AI chip exports went into effect. And the earlier restrictions banned the sale of H100, which is the processor of choice for AI firms in the US, such as OpenAI. And instead, Chinese companies were able to buy a slightly slowed down version called H800 or A800 that complies with US restrictions, primarily by slowing down on a device connection speed called interconnect. The new rules will ban those chips as well, senior administration officials said in a briefing with the report. And the restrictions could also affect chips sold by Intel, AMD, and of course companies like Applied Materials, Lam Research, Clack Corporation, Nvidia, not to mention ASML. So if you come over to some of these semiconductor companies, so I don't know if we've got a watch list for semis. There we go, semis. There's blood across the board here. Nvidia down a little bit, close to 7%, now sitting at just under $430 per share. We got Super Microcomputers down over 4.5%, Intel down almost 4%, AMD is down a little bit over 3%, Broadcom is down over 3%, Lam Research, ASML is down over 2.5%. We got TSMC, Applied Materials, Micron, Qualcomm, Texas Instruments, and On Semiconductor. So it's across the board. We've got semiconductor stocks selling off, not to mention the NASDAQ is down a little bit over 1.3%. And S&P 500 here also rolling over, down about almost 80 basis points. Now, this is also affecting a lot of other companies, like, for example, Tesla is down 2%, so our calls are absolutely printing right now. You got Google here, Meta, Apple, everything is down. Obviously, everything is selling off here on the day today. Now, I do believe that this is a little bit of an overreaction because, look, well, I guess it's just going to come down to a very interesting conversation, in my opinion, because last year, when a lot of these chip bans came into effect, markets sold off, right, pretty aggressively. But there were loopholes created in order to subside these restrictions and these bans put forth by the U.S. government, and it was business as usual. And we did the calculation earlier. I think last year we did the calculation. It affected kind of less than 5% of the overall revenue for Nvidia, because first of all, it was a small percentage of sales going to China, and second of all, it was still going through with the H800 and A800 chips. Now, this is also going to get banned, but I'm pretty sure there is going to be a resolution with other products that NVIDIA can create, or they can kind of work around them, right? So there's going to be loopholes, there's going to be ways to work around it. Now, the bigger problem, which I believe is something that I think we need to address, is that will China retaliate? Right? So one of the things that was mentioned in this report is the idea that companies that want to export AI chips to China or other embargoed regions will have to notify the U.S. government, right? So the U.S. definitely is putting tighter conditions. They want to be very strict with what chips do and do not get shipped over to China. And senior administration officials also said that they plan to expand the list of semiconductor manufacturing equipment subject to U.S. restrictions, and chips for consumer products like game consoles and smartphones will not be subject to the export controls, although companies may have to tell the Commerce Department about their orders if the chips are fast enough. So again, it's all about the speed. I mean, the U.S. is basically trying to not allow China to expand with the technology that they have with respect to AI. So basically, what they're doing is they ship them the slower chips and give us the fast ones. That's really what's happening at the end of the day. And this right here was also something that I discussed. Basically, the restrictions cut off a big and a growing market for AI semiconductors. That's really what they're doing, what they're trying to do, and could raise concerns that the Chinese government will retaliate economically against U.S. firms doing business in the country. And that's actually a big problem, right? And there's a lot of companies that don't even make chips that might get caught in the harm's way. Like, for example, Tesla, right? Or even Apple, right? They're not in the business of making chips, but they are some of the biggest companies in the U.S. So if China retaliates because of these sanctions on chips, then that retaliation could come at the expense of Apple or Tesla manufacturing facilities, or certain laws or certain things that can make lives difficult for Elon Musk, Tim Cook, that are not even, they don't even have anything to do with this, right? So there's going to be a geopolitical, angle with this, but right now I think the markets here are definitely a little bit more concerned with everything that has transpired in the last 14 hours with, of course, entire semiconductor sector pulling back. Now, talking a little bit more about NVIDIA, AMD. NVIDIA, as I've mentioned, valuation's a little bit more on the expensive side. However, I would argue, like on a PEG ratio basis, it's actually much better compared to some of the other stocks out there. But even that being said, I think low 400s is the level that I would really be watching for NVIDIA from a support standpoint. But even from a fundamental long-term investing standpoint, it's nowhere near close to my intrinsic value yet. So yes, the valuations were a little bit more expensive. Yes, the market price, rallied quite aggressively, went up too high too fast. But I still do believe that this catalyst should not be the reason why the stock's down 6%, because it's a bit of a noise and bit of an overreaction. I think the real pullback should come at the expense of valuation, and of course growth kind of priced in for NVIDIA, and it's kind of trading at a perfect sort of valuation. Hope that makes sense, right? I mean, this seems a bit more overreaction, similar to what we witnessed last year. And same thing with advanced micro devices. I mean, it's coming down to low 100s again. Got rejected at $112, but I do believe there's going to be a lot of supply. There's going to be a lot of demand, a lot of buyers sitting right here in the low 100s for advanced micro devices. So that's really where the support level is going to be. So a little bit of noise, a bit of an overreaction, in my opinion. So I don't see anything of a problem over long term, unless, of course, China retaliates in a way that's going to be detrimental to a lot of these companies, and of course for other U.S. companies based out of China as well. So hope you guys enjoyed this video. Let me know your thoughts down in the comment section below. Don't forget, we have, again, private videos, stock reports. Everything's going to be available for members only. Links to our Discord and Patreon is going to be down below, and we'd love to have you on board. And as always, happy investing. I'll see you all in the next video.